Hey everybody, day 3 on the road, so thank you all for joining. I will hopefully, let me see, let's make sure the audio is working. Good, it is, thank goodness. I will keep my camera to a minimum and switch to slides, and this is the quickie. The quickie's back. We're going to talk about Bitcoin whale watching, what they're up to, a little bit of news on Solana and Avalanche, plus some mind-blowing macro statistics, and is it worth it to go to college anymore, and what people are thinking, the real cost of a mortgage after all these rate hikes, the impact of the rate hikes on the market, and so much more. So let's just jump in. And of course, as usual, this is edutainment. So thanks all for coming. Yesterday I had a little outage, internet outage at the very end of my presentation. I'll do a quick redux of the charts right after this. It'll take 3 minutes, but just to cover up on the near versus avalanche face-off. So, and if you want to amplify your intelligence, you know to subscribe here. So the story, well, first of all, happy Thursday, everybody. Thanks all for joining. Crypto market cap still at that 1.19 trillion, 24-hour volume about 30 billion. Price of Bitcoin is 29,300 still. It's like it's trading like a stable coin. That's the joke going around. Bitcoin dominance 48.3%. Ethereum again just shy of $1,900. ETH dominance 19.1%. And agriculture's doing well. Fear and greed 51%. So let's just jump in. First of all, let's look at some on-chain data here right now. Mr. Hammer, thank you for... Whoa, can't see my slides. Whoa, that's funny. Wrong camera. Oh my God. It's so hard when you don't have your usual setup and you're juggling everything. So pardon my dust. Thank you, Mr. Hammer out there. So thank you for letting me know I wasn't sharing my slides on the wrong camera. Anyway, the biggest cohort. What's important about this? I always watch the whale movements, and if we look at the 1,000 to 10,000 Bitcoin whales, you can see here in red, they have accumulated 134,000 Bitcoin over the last 90 days. That's up 3%. They own pretty much a quarter of all the Bitcoin. That's why that is the key cohort that I follow. When they are selling, you want to be selling or hedging. When they are buying, you want to be buying. Then that's really, really interesting. Now, the 10K to 100K have offloaded 113,000, but they could be moving into different wallets, smaller size wallets, so they can't be tracked. And then more than 100,000 Bitcoin is 13,221. But the key is pretty much everybody is accumulating. And there's so many tailwinds for Bitcoin right now between the halving and regulation and everything else that's going on. It's almost like a miracle that we're still down to 29,300. I do wish for a nice dip. We probably may not see 25K again, but you never know. I've said that before. We did get that $25,000 dip a month or so ago, but I'd love to see it return. Now let's look at more proof as to what's going on chain. Here, this is kind of proof evidence of the previous chart. Big thank you to Sanjay for sharing with me. This is the short-term holder dominance across exchange inflows, and you can see it's exploded to 82%, which is drastically above the long-term range over the last 5 years, which is typically 50 to 60%. From this, we can establish a case that much of the recent trading activity is driven by whales active within the 2023 market, the short-term holders. They are under 155 days of holding, and they've been the ones moving the market right now, and that's pretty evident from this. In addition to whale watching, let's break out the 3 cohorts of whales, which is also super interesting to look at, see who's doing what. Now, when you explore the divergence within the whale cohorts, you can observe changes in the supply owned by each sub-cohort over the last 30 days. So whales with 100,000 plus Bitcoin have seen a balance increase of about 6,600 Bitcoin. Whales with 10,000 to 100,000 Bitcoin have seen their balance reduced by 49,000 Bitcoin. And then your 1K to 10K whales have seen a balance increase of around 34,000 Bitcoin. And this analysis of the whale net flow to exchanges can be used as a proxy for the influence on the supply and demand balance. Now, whale to exchange net flows have tended to oscillate between plus or minus 5,000 Bitcoin a day over the last 5 years. And whale inflows to exchanges is historically large, with 255,000 Bitcoin flowing from whales to exchanges. And internally, whale subcohorts are seeing bounces shift in size between minus 49,000 to plus 33,000. So in aggregate, the whale group is seen as tiny minus 8,000 Bitcoin in net flows. However, through June and July this year, the whale inflows have sustained elevated inflow between 4 to 6,500 a day, which is all in all interesting to watch. Follow the big guys. Now, we also had some interesting macro news before we get back to more crypto news. One is the GDP positive surprise. Is it a soft landing? Well, the whole world has been calling for a recession, including myself, because every classic macroeconomic indicator says flashing red signs, recession, recession, recession. But then we get the surprise, GDP up, 2.4%. Anyway, it's insane what's going on. Nobody can figure it out. But we'll look at some more data points to try build a picture of what's going on. In addition, this was an interesting performance of the last 24 hours that I saw pop up on my screen. And you can see things have kind of been mixed, but the speed, what I want to just emphasize here is the speed at which alts can recover. This is the last 24 hours. You got the big Bitcoin Daddy up 0.77%. You've got Ethereum up 1.19%. And then you have Solana up 7.26%. That is kind of staggering how that is there. And just the pace at which these altcoins can move relative to the bigger assets is stunning. So imagine extrapolating that over the next 18 months. Then you can really understand how maybe things like Solana will far outperform Ethereum, and Ethereum will outperform Bitcoin, but maybe not by much this year. In addition, another key thing that popped up just yesterday, shout out to DJ for this one, this is payment processing. A lot of people see that as the key use case for crypto, not only for Bitcoin, but many other chains, stable coins, etc. And this is a nice little screenshot of Circle API for payments between fiat and blockchain technology. And what's key here is when you are moving money, it has to be moved quickly. Okay, you need to confirmed quickly, and you need it hitting the accounts quickly. And you'll see very quickly from this, you've got 5 seconds and 40 minutes and 20 minutes, etc. And then all their outlets on Solana and USDC, 400 milliseconds. Again, nothing comes close. Nothing comes to scalability or the ability to manage a lot of transactions. So we'll see where all this goes. But if that use case becomes a really heavy, hardcore use case for crypto, there is one way of transferring stablecoins. And that is not with what used to be considered old payment rails or even old 8-year-old, 9-year-old payment technology. This can all be done by other blockchains. So keep an eye on this space. Speaking of other blockchains, there's something interesting going on here. And recently, Bank of America, and this is kind of ties into my video from yesterday of Avalanche versus Near Protocol, a very tight race, very different assets. And again, we look at it completely objectively, and I'll do the redux in a few minutes after this video. But Bank of America released a report predicting that asset tokenization will exceed 16 trillion in the next 5 to 15 years. It's a big time frame, but I always said that everything will be tokenized in the future. And it cited Avalanche Evergreen Subnets as one of the key platforms driving the future of transferring value. So thinking about this, Avalanche is making a big push into tokenization with a $50 million allocation to create tokenized assets on its blockchain. But this move is significant for a few reasons. First, it shows Avalanche is seriously becoming a leading platform for tokenization, which is a good strategic move in my mind. Second, it suggests that there is growing demand for tokenized assets as institutions are increasingly looking into invest in this space. But the big thing that's kind of sneaking in the back of my little head is maybe, like you got Larry Fink there pumping Bitcoin, talking about the tokenization of everything and the new global currency, etc. But it raises the question whether Avalanche could be one of the crypto firms that BlackRock is talking to. And BlackRock, the world's largest asset manager, has been exploring the use of blockchain technology and it has been rumored to be considering investing in a crypto firm. Of course, pure speculation at this point, but maybe Avalanche could be part of the tokenization of everything for BlackRock. But remember, this would be a private subnet. This may not necessarily yield a benefit to token holders. Sometimes they could become kind of subnet private blockchains for TradFi reasons. Anyway, a lot to see here, but monitor this going forward. Now, S&P 500 soared to new highs after the dovish Fed yesterday. Some people thought it was dovish, some people maybe not so much. And also the crazy meta news. It was super interesting, but it's kind of weird. This next slide really says it all. I think it's funny. So every time you see a picture of Jerome Powell's face, it's a rate hike. And you see the performance of the S&P 500. So the first couple, it didn't matter. The stock market went up. Third one, stock market went down. Fourth one went up. Fifth one went up. Sixth one down. Seventh one down. Eighth one down. Ninth down. 10th down, but only briefly. 11th down, only briefly. 12th down, only briefly. And then the 13th, or whatever it is at this stage, stock market goes up. So it's like nobody cares about the hikes anymore. It doesn't matter at this stage. What is pretty certain, though, is they seem to be done. They can't go anymore. And next time something really breaks down, they will cut pretty fast. We'll talk more about that in a minute, too. But more importantly, let's switch gears and talk about MicroStrategy dilution. Great little chart here. And I always said it's okay for companies to dilute their stock if, for example, if it's a Bitcoin miner, they issue stock in the bear market, buy rigs on the cheap, and plug them in immediately. It's no impact to shareholders. And the same is also true for MicroStrategy. They issue shares and they buy Bitcoin immediately with the proceeds. So what this chart shows you is the MicroStrategy Bitcoin per share. MicroStrategy finances its Bitcoin purchases by issuing new shares of its stock, yet there is no dilution to shareholder value, meaning that each share still represents the same or more underlying Bitcoin. So for those of you, I saw some people being a little bit concerned about MicroStrategy dilution. It's a nothing burger as long as they don't use it for lining the pockets of executives, etc. That is key. Next is Tesla customer satisfaction reviews. This was published by Bloomberg, and literally it aced the test. This is the Model 3 owners that have had the cars for multiple years, and a big detailed survey on reliability, quality, and problems that people have had. And literally there is no survey result like this for any vehicle on the face of the planet. These things are reliable. And I was thinking about doing a video of my near 5-year experience with my X, how it's cost me nothing in maintenance. The last time I paid to charge it was in December of 2022. The total cost of ownership is ridiculous. It is mind-blowing. I would dread, my previous car was an X6M BMW, and it got about 12 to 14 miles to the gallon. And that would cost me $120 a week in gas, nearly $500 a month. This thing cost me $4 a week. Anyway, it's just, it is very stunning, and very few people realize it. But not only is it cheap to run, but also flawless when it comes to maintaining, etc. Anyway, on to the next topic. Let's look at the Fed fund rate expectations through 2025. You can see market expectations as they go forward. Now, this is from Charlie Bolello. Shout out to Charlie for putting these great charts together. But here, the current market expectations for the Fed path of the Fed funds rate. September is the next meeting, September 20th, 2023. That'll be a pause. November, pause. December, pause. January, pause. And then March, they expect either a 25 or 50 basis point cut, and then additional cuts all the way out to January 2024. Remember, they can't keep rates this high. They are shooting themselves in the foot. They're paying way over $1 trillion, soon to be way over $1 trillion in interest, which is way more than many other programs that the government has to fund. So I do believe this chart will hold, but it'll be accelerated more because a disaster will happen, whether it's more banking crisis, whether it's a commercial real estate crisis, whether it's some other travesty. I don't know, but they can't sustain this for long. But we'll see. And talking about some of the damage of high interest rates for all those in the real estate market out there, this is kind of stunning. Despite we had a big surprise in real estate sales for new homes, completely caught everybody's surprise. The problem is there's so little inventory in the market that's driving people to just bite the bullet and buy. But this chart here shows the drastic impact of interest rates on a $500,000 home. And all equal but interest rates, if you imagine 3%, you would have a $2,564 a month mortgage payment. That is $682,000. That's the total cost of the mortgage. At 5%, it's $3,000 a month. That takes it up to $869,651. And at 8%, that's nearly $4,000. So $3,969. Total cost of mortgage will be $1.2 million. That is literally nearly double what it is at 3%. So again, that takes a big bite out of people's retirement plans, standard of living, etc. So this also cannot be sustained high for long. Next, let's talk about oil. Stronger and higher. This is the global oil consumption. It rose to more than 100 million barrels a day during the first 4 months of 2023. And this is stunning. So despite people think the world is getting greener and moving to alternate renewable energy, etc., the world is also getting busier and burning more oil. So we are nowhere near peak oil demand yet, but it'll come, I think, at some stage. And this is also interesting. And sometimes I find things and I just believe they should be shared, as everybody should know about this. Now, I've always said that syllabuses at colleges are stuck in the past, and I believe you can learn more for free and faster on YouTube or with AI or reading by yourself. But this is cool. This just came out from Gallup poll, and it's Americans' expectations of higher education have been high, viewing it as a functional institution amid societal changes. But recent polls show a sharp decline in confidence in colleges and universities. Young Americans in particular are turning away from college due to diminishing belief in its economic payoff, leading to a decrease in favorability towards education. And this disillusionment with college stems from inflated expectations and a realization that it may not be the magical solution in all life's challenges, especially when you see people that went to college 20 years ago and they're still paying off college debt. It is criminal. Not only do you lose 4 years of opportunity cost of earning, but then when you come out after incurring maybe $250,000 in debt, there may be no job. It's really, people are shaking their heads now, and this has changed radically from what it used to be not too long ago. Final quick story of the day. Craig Wright, he's the guy who believes he is the Bitcoin creator. And I just want to say, I always say this, 2% of the world is toxic. Remove toxic people from your life. Remove negative people from your life. They don't add any value. But the whole ethos of Bitcoin is about positivity and giving and everything else and fighting against the machine. But this guy, Craig Wright, has been involved in legal battles all over the world. Now he's going after crypto exchanges Kraken and Coinbase, claiming trademark infringement in the name Bitcoin. Satoshi would never do that. And Satoshi would never attack people. A UK High Court judge ordered Wright's companies, Wright International Investments, to provide security deposits for legal costs. But Wright said he couldn't do it. They just, I don't know what they want, 150,000 or 250,000 pounds or something up front. He said apparently he has no money. If he was really Satoshi and he was really such an individual, wouldn't he move a little bit of his Bitcoin, turn it into cash and deposit it? Again, it's all against the ethos of what Bitcoin is and what Satoshi Nakamoto created, whether he, she, or the team. And, this guy is just failing in his lawsuits all over the world. Also, the judge ruled Wright's infringement lawsuits, etc. They were just fighting with him. I didn't dig into all the different cases because there's so many going on. But really, he wasn't able to determine his true identity as Satoshi Nakamoto. So therefore, they don't know if his cases can proceed. And a shout out to Peter McCormack. Pete McCormack, good guy, great guy, podcaster. He was also sued in a separate libel lawsuit, and the Court of Appeal upheld the decision to reduce Wright's libel damages to £1. That's about $1.20, citing deliberately false evidence presented during the case. So Craig Wright, if you are Satoshi, of course you're not, but if you really were, you wouldn't be this individual suing everybody left, right, and center. It's easy in a heartbeat, and I've always said this, you can prove who you are by just moving your wallet. But you can't do that, can you? Okay, so with that, everybody, thank you all for being here. Smash the like on the way. A big thank you to everybody on Patreon. And sorry for missing the slides at the beginning. I'm still here. So that was a quickie 20 minutes. Thank you, everybody, for being here. Appreciate you all. Sorry about any background noise, and I'll see you all tomorrow. I'll do that quick redux as well in a couple of minutes. Bye all.